Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the New Zealand versus US dollars. We head to the end of the trading week and the beginning of the new trading week. What's going to drive those currency pair going forward? Nothing much drove it this week. We traded up and down in a very narrow trading range. So that may prove to be good for next week as the market's ready to move in the New Zealand versus US dollar. Let's get started. Coming into this current week, we had the Reserve Bank of New Zealand interest rate decision, but they kept rates unchanged, and the price action as a result of that was more up and down in this currency pair. It lost all its momentum, and what we saw was the low price come in at 0.60816. The high price came in at 0.6151. That's only 70 pips from the low to high trading range. So it's tough to say that the market bias is or the traders have any sort of conviction as far as which way they want to go. Having said that, what we did do this week was that we found a support near a key swing area on the downside. That's this yellow area right through here, where we have a number of different swing lows and swing highs going back in time. You can sort of eyeball all those levels through here. We also found willing sellers against a swing high area up here between 0.6151 and 0.61 looks like 59, and that too had a number of different swing lows and highs going back in time. So the swing areas did their job of holding support, holding resistance. The problem was that the market really didn't move very far between other than within those levels. What we did do as well was trade above and below the 50% retracement level, and that's in between those two extremes. And in trading here today, we are currently above that 50% midpoint at 0.61096. So if I were to give a bias to the market or to the traders that have more control, it would have to be to the buyers. Why? Because we're above the 50% retracement. We're above the 100-day moving average. That's a blue line on the chart. We're above the 100-bar moving average on the 4-hour chart. We're above the 200-day moving average. We're above the 200-bar moving average on the 4-hour chart. All those things being above those levels is something more bullish for this currency pair. That doesn't mean that we can't go lower. And if the price were to move early next week below the 50% retracement, it may be enough to tilt the bias more to the downside here, at least in the short term, and have traders coming down and testing these areas, including the swing area down through here and the 100-day moving average. Get below the 100-day moving average, it's a different story altogether. Now, on the top side, if we were to move higher and move above this swing area right here, we'd have the 61.8% retracement and move down from the December 2023 high to the April low to get through at the 0.6107 level. And if we get above that level, then we'll look toward this swing area up through here, which goes back in time. It's not, you can't see all the levels there, but the last thing the market did against this area was find willing sellers here, find willing sellers here, find willing sellers here. So that's going to be a key level on the top side if the buyers were to take more control. But for now, this week was all about ups and downs. We'll see if next week has something to do with breaking out and moving in the direction of the break. We have the technical levels in play. We know where they are. It's just a matter of following through, getting outside of this non-trending range. That's my technical look at the New Zealand versus US dollars. We head into the new trading week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.